1 week ago today, on January 10th, I told you I thought that the market was going to bottom this week that we just had. I told you I thought we'd go down and fill that gap and then rebound back up, hit the trend line of support that I talked about in the weekly time frame. And I told you the VIX was suggesting a bottom, the fear greed index was suggesting a bottom, and I laid out my case, and I think that that has now been proven correct. So possible the NASDAQ and S&P diverge from one another. We go a little bit lower. Sometimes they do that at turning points. We'll be watching the NASDAQ. Does it go and make new highs? I believe the S&P is going to. Very well could see NASDAQ do it. We'll be watching, or it could diverge. Did at the January 2022 top. We'll be looking for clues, and we'll talk more about that as we go forward. But again, powerful rally this week. So I think that, again, my prediction has played out this week. You know, most people will tell you their predictions after the fact. I don't do that. I tell you what I think before it happens. Right or wrong, I tell you what I think. Very few people have the guts to do that, to stick their neck out like that. Like I talked about the December peak, the divergences that were warning us we were going to get a sell-off on the 60-minute chart, and they're in the daily time frame, those nice divergences on the Dow and the Russell. Now, the rally continued, and I told you we can go up to 200 on the S&P 60-minute chart and then get some kind of pullback. I think that's likely the case right now. The Dow was up 0.78%, up 335 points. Closed just under 43,500. The S&P was up 1% exactly, 59 points to close just under 6,000 at 59.97 rounding up. NASDAQ was up just over 1.5%. The Russell was up 0.40%, and the VIX was down 3.80%. Warned you about the trend line with these divergences are forming, the larger divergence from the peak over here, and the divergence in the more recent price action on the histogram, and that allowed us to get the rollover this week, and we just saw the overthrowing that trend line as I talked about. I told you we were hitting the resistance zone with the 10-year Treasury yield, and I told you if it turns off of this trend line surrounding the inflation data, the S&P could put in a bottom. Yields will drop. They have a negative correlation with the market. The yields would drop, and the S&P would begin to climb higher, and eventually I think it will again move to a new all-time high to complete the blow-off top. Don't think it's done yet, even though my signals warned about a December sell-off, those 60-minute charts and negative divergences in the daily time frame. Don't think that was a peak for the S&P 500, and it's still going to go make a new high and end up diverging with the Russell 2000 as it so often does at major tops. The market rally on the inflation data, getting a relief rally, kicked off earnings. The earnings season, the banks, the market recovered. JP Morgan with the Dow. Dow had a big recovery. And remember last week, I showed you the Dow chart. 1 week ago today, I showed you the Dow chart. I showed you the Russell chart. And I told you again, begin to see a recovery. And we can begin to see the 10-year drop. Still may form a double top up here somewhere. But again, the 10-year at this trend line and the Dow and the Russell major sell-offs we're suggesting a rebound, and I talked all about that a week ago. Previous week we had, I thought a bottom would develop this week, and I think that has now been proven correct. I told you again, last Friday we had that big down day on the S&P 500, and I told you we were still likely going to fill that gap, the presidential election rally gap that we had at 57.83. The VIX was warning that would be the case. I talked to you about this over the weekend in the previous week's video. So again, a week ago, we had this signal. That was the close a week ago. It was up greater than 10%. It was warning we are still going to have downside. And I told you that was likely going to give us a move back to the trend line. Okay, on the S&P 500 weekly chart, slightly moved below and then bounced off of, caused us to fill the presidential election gap, 57.83. That's exactly what happened, and this was suggesting more downside in the next two sessions. But I told you I thought we would bottom surrounding that trend line and filling that gap, which we did. Big move up of greater than 10% on the VIX, and the S&P had dropped 91 points. It was down 1.5% there, and then it went lower on Monday, and we bottomed out, and we got the gap and trap, filling the gap at 57.83, the presidential election gap. And I told you we can now see a continuation of the election rally, which is what I believe is now about to happen. I think we'll probably pull back first. We'll resume the advance to my target levels that I've talked about. And I have pretty powerful evidence, some things I want to show you for this weekend of why I think new all-time highs and where I think we're going. Brand new charts I want to show you. Charts I've been working on. VIX, and again, as I've said, the VIX peaked back over here. And I told you oftentimes why we thought we were going to move down lower is because often the VIX will bottom, or the VIX will top before the S&P bottoms. And I think that was the case here. The VIX, the S&P had a discrepancy on Monday. Okay, this is Friday. Now look what happened on Monday. The VIX surged up, and we a reversal bar, and we got that reversal bar on the S&P 500. We gapped lower, but we ended up back up, and again, filling that gap at 57.83 was the election gap higher. VIX sent a clear message that, hey, we were going to still go lower, but then the signal that, hey, we didn't move to a new high on the VIX, suggesting we were bottoming out, again, with the gap fill at my trend line, which I've been talking about all this past week here and the week before that warning. I thought a bottom would happen this week surrounding that trend line, and that is exactly what happened. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you follow the link, it'll take you to a secured site. You can donate any amount you want. Most YouTube channels are supported through sponsorship. I don't choose to go that route. Most of the money is made on YouTube channels. I'd rather have a direct relationship with you because I just don't want to sell you stuff. The sponsors contact me all the time, and I turn all those offers down. Don't want to do it. I send you to websites that want to sell you gold with 3 times the commissions. A lot of shady deals out there on the internet. So again, I just ask that you support the channel. I need to hear from you in order to make it work, though. I know you like the charts, you like the indicators by supporting the channel today. I thank you for that. In my next video, it'll be extremely important that you watch that video. It's going to be closed Monday, and I'll post a video either Sunday morning or Sunday afternoon. But I think really some brand new charts, really important to share with you. Other indicators that tipped me off that, hey, we're likely going to have a bottom this week, and that's why I told you at the previous week that I thought we would bottom this week, and we did, in my opinion. My next video will be one of the most important videos about where we might see a market peak. There's some brand new charts I've been working on. Check back for that video. Don't miss it. Make sure you watch this video all the way through so in the know to what's going on. They're doing an outstanding job in marking the turns in the market over and over. Now here you can see the gap I'm talking about. I warned you, again, we could see a larger divergence. I talked about the 15-minute chart, and here on the 5-minute chart, we had this gap lower, and that formed the bullish divergence on the 5-minute chart and up here on the RSI. And you can see that. And look what happened all week. Now, again, I told you I was looking for a bottom. It's looking for the yields to drop in the inflation data, and we moved into earnings season. We got this bullish divergence, and look what happened. Here's a gap and trap. People that told us that the December sell-off wasn't going to happen, extremely bearish down here, and I told you, again, we get a bottom because people were saying, you know, we had that head and shoulders set up on the S&P. I told you I thought it was a fake out pattern. Bitcoin set up the same pattern as the S&P, and it evolved into a bull flag. But again, here on Monday, we gapped lower, and then we went higher, and then we gapped higher on Tuesday with the PPI, pulled back, chopped around, and we got higher low. So I think that was a wave 2. I think we've now started, completed wave 4. We've now started the minor wave 5, and I think this was the first wave of that minor wave 5. I think we'll get a pullback and get a wave 2, but it could be just be a small pullback. It could be something bigger to fill some of these gaps. Nevertheless, I digress. With the CPI, we gapped higher right here. I think that is a 3, a 4, and with our triangle, and then a 5. And I think we're going to eventually see some kind of pullback. Now, gaps to be watching, but again, I talked about this possible inverse head and shoulders pattern. I drew some necklines, slanted necklines here, and again, we talked about this being an inverse head and shoulders pattern, and I think that's created a bottom here in the 5-minute time frame. To talk about that, and this is the price action all week. We went higher all week. Now we have some gaps to be watching. We have the gap here from Friday, and that gap will get filled at 59.38. We have a gap here down here from the CPI rally at 58.43 rounding up. So just some levels that I'm watching. Now, again, keep this divergence in mind over here with our indicators. And we talked about the 15-minute chart going down for another leg down because the VIX was predicting that. I took the time to show you that because, again, we talked about that 1 week ago. And I showed you this chart. And again, on the 10th, we hadn't had that gap lower yet. And I said, if we did, we can get this divergence right here, which we ended up doing here on the RSI in the 15-minute time frame and on the MACD. Do you see this? Are you picking up what I'm throwing down? And that's why I told you, again, hitting that trend line of support with that weekly trend line, we talked about that, with that gap down and filled our gap from the presidential election at 57.83. You see it right there. That dotted line is the gap fill. Form these bullish divergences. And then now we've had this big recovery. And it, again, the gap fill and the trend line on the S&P and the Dow and the Russell being very oversold, the Russell hitting the 200. I talked about all of these things a week ago. Why I thought we would get a bottom this week, and it looks like that's going to be proven correct. Now, our gap lower on Monday created these divergences. We talked about that at the time, talked about that possibility before it happened of our signal on the VIX. And again, I think we've got a possible 1, 2, 3, 4, and maybe 5 completing here. Maybe it's not done. Who knows? We'll be watching. But got to be watching. Did we get some kind of pullback, some kind of retracement? Is it a shallow retracement? Do we just come back and fill this gap or maybe go to gap support, or do we go higher and then just get a shallow retracement back down, get something bigger? And again, our on the 60-minute chart, I'll show you that. We might move towards that. We're getting the 50 above the 200. We'll be watching the gaps. We'll be watching gap support here from the CPI rally. We'll be watching the gap support here and the breakout here. Or do we just come back and get a small little pullback and go higher? End up this thing's not done yet. It's forming a rising wedge, and then we just back test and that's it. And we don't come back and fill these gaps until a later date. We'll be watching. I don't know if it's going to be just a mild pullback or if it's going to be something big. But I think we're in a bottoming process, and we still have moving averages on the 60-minute chart in a bearish arrangement. So we very well could be coming back here, maybe push higher, a little bit higher, and then still come back to one of these levels or something uglier and test this level. We'll be watching to see how it unfolds. We do have negative diversions here. We have the negative diversions here. We got another reference point right here. Still may not be done, but we'll be watching to see, do we pull back? We got a candle of indecision in the form of a doji on the daily chart, and then we got a divergence here. Again, may see one here in the more recent price action, but we've got this larger divergence suggesting, again, that we're going to likely see some kind of pullback with our short trading week next week. Maybe that was initially surrounding inauguration day, if yields start turning back up, fear of inflation with inauguration day, the tariffs are coming. I said it's still possible we get a double top, or do we get a counter trend and we get a lower high and then turn down further? I think that the 10-year yield suggesting we're carving out a bottom this week. I warned the previous week. I'll be watching the gaps up here, 607 or 6037, 6074. Again, our triangle broke down. We had the Fed reduce the amount of expected cuts for 2025 from 4 down to 2, and the market sold off. We've had these rebounds. These divergences have given us a rebound. Look at these divergences here on the MACD on the 15-minute chart and down up here on the RSI. I mean, this is absolutely amazing stuff. And again, the extremes, divergences at extremes gave us peaks. Now here we have, again, this bullish one and this bearish one. So pretty fascinating. Broke the trend line. We'll be watching to see, do we end up dropping back into the trading range of the bull flag that we broke out of, or do we go higher and then just back test the trend line? So we'll be watching to see how it falls. That's why I say you don't know if it's just going to be a small pullback or if it's going to be something bigger. But I'll be watching these gaps, and I'll be watching gap support and our 50 period on the 60-minute chart. And let me just say here on the 60-minute chart of the S&P 500, and the bullish divergences that formed here, giving us these bounces here, and then now here. And I talked about also 1 week ago that we could see the RSI turn down in the most recent price action and form a divergence right here, like we had back over here. I didn't mark it on this one though, but back over here. And I talked about forming a divergence right here and forming a divergence there on that 15-minute chart. And we ended up doing it on the 5-minute chart as well. But we talked about these possibilities because the VIX was telling us, hey, a bottom was going to form. And I told you again, I told you I thought we'd come down, hit this gap fill area and hit the trend line in the weekly time frame and get a bounce. That's that 2023 trend line that I've been talking about. Absolutely incredible support levels. Talked about all this before it happened. And I told you that, again, you've got still more upside. We didn't reach the trend line. And I've concluded, I talked about excluding, because we overthrew it, and excluding the peak here because we slightly overthrew that there. The previous trend line like that's what I'm referring to. We slightly overthrew it. And then I told you, again, we could reach this one here and still overthrew that, move back to our 200 period moving average, either hit it and stall or try to overthrow it and try to break out. We've hit it and tried to overthrow it and break out. So now we have a rising wedge that we'll be watching to see if we pull back now. And if we do we pull back into the trading range here of the bull flag pattern that you can clearly see here? I've talked about this, which again, I think is a strong signal that we're going to have a continuation pattern here that's going to take us above the December high. Now, at the December high, heard extremely bullish and said there's no possibility market's going down. I talked about these divergences on the intraday charts. We had the divergences on the daily chart, really nice divergences on the Dow and the Russell, which I talked about on the daily chart at the time. Again, the Dow slammed into the major trend line of resistance in the weekly time frame. Peaked on December 4th. Now, while the Dow went down and the Russell went down, S&P went sideways. About the Dow turning off of that trend line in the weekly time frame right on the nose. And I told you I was looking for a bottom this week because the Dow was very oversold. The Dow up big time. The Dow was up 3.69%. It rose by 1,549 points. This is why I was telling you I was looking for a bottom, because the Dow was very, very oversold. Just like I told you at this trend line, I was looking for a sell-off with the market. Dow and the Russell went down, the S&P went sideways, and then we got the Fed reducing the amount of rate cuts for 2025 with the dot plot 4-2, and we saw the triangle break down, and we got a bigger sell-off on the Dow and a bigger sell-off on the Russell. But that's why I told you I thought we had a December peak right there, and I told you if we had an upward resolution with the triangle on the S&P, this might not be as big a sell-off, but if we had a downward resolution with that triangle, we can get a bigger sell-off with the market. A triangle on the S&P 60-minute chart. I talked about these divergences on the daily chart at the December peak. I talked about the bullish divergences that I thought were forming here, and we went a little bit lower on Monday, and I told you, again, we had triple bullish divergence on the Dow and on the Russell. And the Russell, again, tipped us off to the top, the December peak. NASDAQ or S&P went sideways. The Dow and the Russell sold off. Triangle on the S&P broke down, and we got a bigger sell-off on the Russell and the Dow. The Russell, I told you to be watching this trend line, and I told you 1 week ago to be watching to see if we gap lower. I told you the Russell is likely going to hit the 200 period moving average, and this trend line there are right here this week, and I told you I thought the market would bottom, and I told you I thought the S&P would go down and fill the gap, hit the trend line on the weekly chart and the daily chart. The Russell would hit this trend line in the 200, and I told you I thought we could see a bottom. I talked about that before it ever happened 1 week ago. We have these bullish divergences that began to form on the Russell and the Dow, just like the bearish divergences. And again, I think that's tipped us off to the bottom, and I told you that's why I told you I was looking for a bottom this week. The bearish divergence on the MACD, and now we have the MACD turning back up, forming this bullish divergence here and getting a bullish cross for the week, bouncing off our 200 and our trend line. And take a look at that weekly chart. We talked about this last week. We've been watching the Russell and the Dow very closely because they've been kind of the roadmap for what's going on. Look at this beautiful bounce. And I told you, I think that the Russell has peaked. I think it will end up diverging with the S&P 500. I think the S&P will move to new highs. I think the Russell has already peaked. And again, that's exactly what we had at the 2022 top. The Russell peaked over here and had a more feeble rebound to the 20-week moving average, and the S&P had moved to new highs. I think we could see something like that. Here, we're getting this rebound off the trend line. I think we'll end up setting a lower high up on the Russell. And again, the Russell had already peaked, just like the Dow, tagging that upper channel line. Talked about all this. Now we're seeing the RSI firm up here. And again, we've talked about all of this before it happened. So again, I look for the clues. Why I thought there would be a bottom this week. All these clues, I think, allowed me to draw the correct conclusion. The S&P fills a gap. We're going to be bouncing and getting all of this bottoming process. The Russell was up nearly 4%, just under 4% for the week. Beautiful rebound, and that's after a massive decline. I told you I thought it was going to rebound. This trend line, absolutely incredible stuff. And here we've seen the Russell drop by nearly 12.5%. Dow dropped over 7%. I thought we would rebound off of these levels, the 200 here, the trend line, and so forth. And that's why I told you I was looking for a bottom, either surrounding the inflation data with the PPI or CPI, coupled with earnings. Told you, because we had the sell-off ahead of Inauguration Day, likely going to see a continuation of the election rally we got in November, when our signals warned about that rally ahead of it happening as well on those 60-minute charts. I tell you, the 60-minute charts are so valuable and so needed. I find them very useful. These divergences tipped us off to the December top and to the bottom that I was predicting would happen this week. Man, this is exciting stuff. The clues together with the 10-year Treasury note yield, the divergences that were forming, and the trend line, the VIX, the bullish divergences on the intraday charts, looking to set up early on this week, bullish divergences on the Russell and the Dow, and our gap fill, and just putting everything together, our trend line in the daily and the weekly time frame, which I'll show you in a moment, which is we filled this gap. We slightly violated that area, but the VIX was correct. You're going to have a little bit more downside, and that's why I thought we were going to hit that trend line. Now we've got a rising wedge. We'll see if we break down from the rising wedge or go a little bit higher and then try to break down. If the rising wedge does break down, again, we'll be looking at the gap fills. We'll be looking at gap support. Look at our 50 period. The reason why I think we're still going to have more time of carving out the bottoming process here, even though I believe that we bottomed over here, I think we'll end up setting up a lower high. Again, we have the 50 right here, a little hard to see there. I have my notes here, but the 50 right there is still below the 200 period. So we're probably going to see a pullback. Whether it is a mild pullback or something powerful remains to be seen. Seeing the bond market, start flipping out again on inflation surrounding Inauguration Day. Oh, the tariffs are coming. That could give us some further volatility surrounding Inauguration Day. But I do think we are going to go higher. The target levels that I've been talking about. Now, this gap fill with these bullish divergences allowed price to drop on the daily chart, again filling the gap, and we got the bullish divergences going on with the histogram and indicators. You have it up here on the RSI. You got a bullish divergence there. Hard to see with my other lines there. Got a bullish cross on Friday. Again, the bullish divergences that formed on the stochastic. And again, I talked about all of this stuff. Told you we set up this head and shoulders pattern, but I told you I thought it was a fake out because I told you I thought we had a wave 4 and that it was an ABC move. This head and shoulders, I marked it here in red. Everybody, when we started seeing the volatility here, that's when it started getting really, really bearish. Oh, we're going to go down. We're going to go way down now. We're saying that back up at the top. Saying we're going to go up, we're going to go up. Divergences said otherwise. Again, on those 60-minute charts and on the daily charts, we got little divergences as well. Bigger ones on the Dow and the Russell. The head and shoulders is doing exactly what Bitcoin did. It's forming a bull flag, and we either broke out of that level or we're getting a head fake here, and we're going to move back into the trading range and come back towards this trend line or some of these gaps or so forth, gap support of that 50 period in the 2-minute time frame. Now, listen, this could be continuation doji where we go higher and then we get some kind of sell-off. Maybe that's just a mild pullback and we just back test and that's it, and we don't get much of a retracement. Maybe the doji is a peak and we get a bigger retracement, come down in here and then get the wave 3. If this is wave 1 completing, I'm looking for a wave 1, 2 of these smaller waves in the larger minor wave. And then wave 3, 4, and then 5, maybe up into the red trend line or maybe up into this channel line, but towards the trend line in the weekly time frame that I've been talking about. I didn't think the head and shoulders was going to play out. I thought we'd hold above the July peak. I still believe that. I believe that we've now bottomed on the S&P in all likelihood, but I predicted a week ago before we ever got this rally back up. So I think that it has played out. The signals that I've been sharing with you, and there are others I talked about, correctly warned we were going to form a bottom surrounding our gap fill. So here's the presidential election rally. Again, we had our 50-period moving average. We formed bullish divergence at this support level. Now with this gap fill, again, we get all these bullish divergences. I think that, again, we're going to have a continuation of this that's going to take us to the red trend line or to the black trend line if our low holds, which I believe that it will. Told you I believe that this was an ABC move back down. I think that we're now completing wave 4 and have started now wave 5, the minor wave 5, and I think we're coming up here, but then I think we're going to top, and I think that's going to be all she wrote. This is going to be followed by a 20% crash quickly that will kickstart the bear market. It'll be ushered in. It'll be ushered in with a 20% crash. That's the way it usually happens. It'll probably be over 2 or 3 months. And I am of the opinion that, and I'm showing you my Elliott wave counts. Usually I don't talk about Elliott wave speculation. I have other counts, but this is what I think is likely the case. And I think that we have this, I'm showing this to you because I think we have this 5-leg push higher, 1, 2, 3, 4. And now I think we're getting 5 up into this area somewhere. I think the market is going to complete a top. Minor wave 5 right here, I think will be completing the intermediate wave 5 right here, which this is intermediate wave 3 and 4, and I think that this whole thing right here, there's 5 minor waves are intermediate wave 5. That will complete primary wave 5, which is these other waves on the weekly chart that I've been talking about, and I think that'll complete a cycle top. That's what I think is happening. That's why I'm showing this to you, because I think that we're going to go higher, but I think it's going to complete our 5th and final wave. So that's what I think is going on. But remember, Elliott wave is speculation. Counts can be invalidated, but again, this is what I think is going on, and that's why I'm taking the time to show it to you. Now, this gap fill area coming down here, there's a major trend line right here, and have this trend line right here, this potential channel and connecting these lows. If we take it further back, you have this massive rising wedge, and this is a 2023 trend line right here. I've just drawn it from here, but we slightly violated it and filled the gap and bounced off of it, and I talked about that a week ago and why I thought we would see a bottom this week. I talked about this trend line at great length and detail the previous week. I talked about it. Previous week's close, we closed just under that 20-week moving average, and I told you we were likely going to fill the gap and hit this level and have the Russell hit that trend line, and the 200-period moving average played out beautifully. I mean, absolutely incredible. Again, if we zoom out here and look at this weekly chart, these are the 5 minor waves that I'm talking about, and I believe wave 4 finished right here at this trend line of support. And I believe we're pushing on up into the upper boundary from the July peak here, connecting to the November and December highs, and I think that that is the area where we're going to reach. And depending on when we come into contact with it, we could see them intersect and peak. That would be at some point in the first half of February, it looks like. Because we didn't reach the upper blue trend line for the last 11 weeks, and I told you with the November rally here, with the election rally right here, and then on into the December high, I told you we failed to reach that level. I told you that is my target. We went up and we hit just under 6,100 at 6,099, and we turned down with the December peak with their divergences. Saw the S&P triangle break to the downside with the Fed. Also a bigger sell-off with the Dow and the Russell, and then the NASDAQ reversed. At that point, it was still rallying while the rest of the market was going down, and it peaked in mid-December. big sell-off surrounding the Fed day. But again, I think we're going up here, and again, the fifth minor wave, and I think that will complete again intermediate waves, and here it is, 1, 2, 3, and this is the 3, 4 you saw on the daily chart, 3, 4, and then I think we get 5 right here, and I think that completes the peak and the top up at these trend lines, the upper boundary of the rising wedge, the upper boundary of the channel right here. I think this is going to be followed by a 20% drop, but this whole thing, I believe, is primary wave 5. This whole thing right here, this is primary wave 4 at 3 at our 2022 top, and at the bottom here in 2022 it's 4, and I think this is 5, and I think that completes cycle top up here once we get this next rally. And again, I remain bullish in the weekly time frame, but I think a top is going to develop. I think we'll usher in the bear market. We never, in the last 11 weeks, I told you I was watching this trend line to see if we could reach it. Signals turned bearish early December. I told you I think that is wave 4. P wasn't up as much as the Dow. I think that, again, that was 3.69%, I believe, or the Russell, which was up nearly 4%, but the S&P was up 2.91%, up about 170 points for the week. So again, a big recovery off the 20-week and our trend line, which we talked about a week ago. Here, and look, this is our trend line from the 2023 low right here. And again, we hit it right here, connecting these 2 points, and we slightly violated it here. You can see it on the daily chart and ever so slightly on that weekly chart. But again, I told you I thought we would balance off of one of these trend lines. I didn't think we were taking out the July peak to go down to the 200 period moving average. I thought we would likely bounce off the 2023 trend line. We talked about that a week ago. It's now happening. So I think we're on our way. I think we'll probably get some kind of pullback, whether a mild pullback or something bigger. We'll see, and we'll be watching our gaps and gap support and period on the 60-minute chart. But if we go higher, again, I think we're eventually going up to this upper boundary right here that could take us on into February somewhere. It'll be longer if we take our time reaching it. Again, now an important trend line off of the July peak over here and the November and December peaks now could intersect and very, very close to that upper channel line in the weekly time frame. This is where I think we're headed, and then I think we'll complete a top up here. Again, if we get there quickly, you'll be at a lower level. If you get there, if you take your time, you'll be at higher levels. So we'll be watching all of that. Get there quickly, you'll be in the 6200s somewhere in all likelihood. We take our time reaching it, go to the 6340 to 6400 area. The MACD turning back up and getting a bullish cross. I told you I thought that was going to be the case, and I told you again a week ago that I thought we'd see the MACD turn back up. We bottom out this week and eventually turn back up and form a divergence with the peak over here, multiple point divergences. What we had over here, multiple points of divergences, and this time I think we're going to come back and break this trend line. And when we do break this trend line, I think it'll validate a reversal to usher in the bear market. So again, I remain bullish, but I do think we're going higher, and I think we will finish the final climax high to complete the blow off top. Again, this blow off top here, I think is not done yet. I think that it's going to complete up in this area. Now we got that bull flag setting up on the NASDAQ as well. Again, NASDAQ went higher when the rest of the market was selling off. It peaked there in mid-December when the rest of the market peaked in early December and the Russell late November. We got this divergence right here. That's given us a sell-off and back to our 100 period moving average. Bitcoin and the NASDAQ doing the exact same thing. They're both bouncing off the 100 period S&P as well. And we've got this parallel boundary. Now, again, if you connect the dots right here, we've moved slightly above that level. But if you draw a perfectly parallel line from the low here and the low here, well, then you have a really nice looking bull flag. So again, the question is the candle of indecision here on the S&P that and really almost a spinning top looking kind of candlestick here. If I bring it up close on the NASDAQ, candles of indecision, they could be continuation patterns or they can be reversal patterns. We could come back and fill maybe some of the gaps from Friday here today or down over here from earlier in the week with the CPI rally and maybe hit the trend line again. But we do have a really nice looking bull flag pattern. The S&P as well. And again, overthrowing that level. We did on the NASDAQ, but you got a really nice looking parallel boundary. And again, maybe boundaries change a little bit on the S&P's bull flag, but really, really nice bull flag here at our 100 and our trending cloud here, which I talked about. Again, possibly bounce. We got that hollow candlestick there on Monday. See if we pull back, but again, we could still see NASDAQ move to new all-time highs. It may diverge with the S&P if the topping tail in the monthly time frame holds. Talking about that topping tail in the monthly time frame, when we closed out the month of December, we got a gravestone doji. The candlestick means nothing unless it gets confirmation and a follow-through. And again, we went a little bit lower in January, but again, this rebound back up. We'll see how we close in January. We could, as I said, we could get back-to-back topping candle patterns, or this candle could be canceled out if we go above it and we try to resume and just go higher. It is meaningless unless it gets confirmation too high. Again, we could still go up here. We never did quite reach this upper black line right here, and we fell short of it. We still may reach it. We'll be watching to see what happens, or just go sideways like what we did over here. Look at the weekly chart over here on NASDAQ. You hit the 20-week moving average, you bounced. Here we hit the 20-week, we bounced. And then you got a test of those lows. We could see that happen next week. And again, you ended up setting up over the next few weeks a lower high while the S&P went higher. I think you could see something like that. If the NASDAQ has peaked, you could see something like that again, or it may just go up and make a higher high and slam up into the black trend line there that I've talked about. This is a possibility still that we go up and make a new high. You say, well, we've rolled over on the MACD. Yeah, we've rolled over, but okay, we rolled over here too, and still ended up turning back up slightly there and getting a confirmation of a lower high, and we went sideways. You could still end up forming a divergence here, confirm a lower high. Log scaling on the NASDAQ 100, again, we could go much higher than the previous peak there if we try to reach that level. This is the log scaling from this trend line right here from the July peak, connecting the peak from the July top there and the peak back over here in the summer of 2022. Going back to the daily chart and this bull flag that's forming, let's take a look at the 60-minute chart. Again, it was a bearish divergences as the NASDAQ continued higher. The rest of the market sold off. Again, the diversions played out. It tipped us off to the peak there. And again, I talked about that bearish Harami pattern on the daily chart, and that was followed by the Fed sell-off the very next day. We have the bullish diversions. This is why I told you I thought we had a bottom this week. NASDAQ still could come down and try to fill this gap. The S&P and the Dow already have filled the election rally gap there, gapping higher. That was this gap right here, filling this gap at 20,227. So that's still possible. My guess is we probably have bottomed on the NASDAQ and the S&P 500. They end up forming a larger divergence. If we see NASDAQ move to a new low, fill the gap, and S&P doesn't, and we come back and we better define this pattern right here, then we very well may not see new highs on the NASDAQ with that topping tail in the monthly time frame. We'll be looking for clues. We'll have these gaps up here that still very well could be filled. We have a bull flag, so again, we'll be watching. NASDAQ may go to new highs. Sometimes S&P and NASDAQ diverge, so just be aware of that. So something worth watching. But these bullish divergences on the RSI and the bearish ones at the December top, the bullish ones here at the January bottom here, and what I think is probably the bottom for the market, here for NASDAQ and likely for the S&P, they played out beautifully. And this is why I told you I thought we'd get a rally this week and a bottom. 2-minute charts, so helpful.